Hi, thank you for downloading the Buyer's Guide. This here is a short training that gives you a little bit more insight on the buying process. My name is Tashana Chisholm. Hello. If you not know who I am a mortgage broker, as well as I have been in the industry since 2013, where I've been in the capacity of real estate from being a loan originator, processing manager, and as well as a financial manager, where we help veterans be able to structure using their homes to be able to structure debt in their finances in order to retire and build multi-million dollar portfolios. And so on, if you've connected me with me through our real estate, our YouTube page online, or if you see me at an event, you may know me as Millennial Mortgage Mommy, where I share with you financial budgeting and real estate tips to help you be able to gain more properties and be able to close on those properties sooner. All right, so without further ado, let's get started. That's my information. If you want to be able to reach me, just go to tashananacole.com. So let's talk about these real estate terms. These are important as you go through the real estate process because these are the main terms that you're going to continue to see. These are like foundational terms. You're going to see these are key terms that lets you know whether or not the property is moving forward, but also it allows for you to have those key terms that lets you know if you're going from application to closing. Okay. Approval, offer, contingency. You'll see something about a contingency later today. That's something that you have in your offer. Your closing costs. This is something that you discuss with your loan officer or mortgage broker. Good faith money. This is something that you include in your offer, which your real estate agent will talk to you about. Title search, appraisal, that's ordered, that's done by your lender. Um, and then home inspection, of course, when you're purchasing a home, you want to do that. We're going to talk a little bit about that. Disclosures, this is what you sign with your lender, with the lender that your mortgage broker has given to you, has signed you up for, or the lender that you're working with. The disclosures basically let you know, hey, this is what you agreed upon in terms of your loan terms. You'll see those disclosures. They do change periodically, but for the most part, it's letting them know this is my house, this is how I'm represented it, this is how much it's going to cost. This kind of has everything in that bundle that you'll have. And then you have your closing where you actually close on your loan. All right, so we're going to talk about these 10 steps. It's good to think about before, during, and after the buying process. And so we're going to kind of touch on that here. And the more accurate that you have in terms of your numbers and what it takes to acquire your property and be able to have that loan, that ownership after owning that property. All of this is important even when you're looking to buy a home. So this is the home buying process. This is the roadmap. The thing is, whether you're doing a residential or a commercial loan for the first time, this is usually the process that you're going to go through every time in order to acquire a property. There are little differences when it comes to construction. There are some things that, you have to have beforehand, but overall, this roadmap does not change. Okay. So first, review your finances. 2, pre-approval. 3, tour you some homes. 4, make that offer. 5, contract and loan approval. 6, inspection. 7, due diligence. 8, appraisal. 9, closing and signing. 10, exit strategy. So let's get into it. All right. But first, I want you to know that regardless of where you live, home transcends the 4 walls we live in. So wherever you are is home. All right, preparing to buy. The first thing you want to do is review your finances before you buy. Why? Because if you have a budget, right? You have a budget. There is 2 types of budgets that you're probably going to have. And we talk about this a little more in the home buying hub where we dive into your budget. but you got what the lender say you can afford, which is based on your gross income, and then what you actually can afford, which is your net income. Okay, the difference is one is what you're actually taking home, and the other is based on what you make before taxes, insurance, and everything is taken out. So you want to know both of those numbers when you're reviewing your finances. Also, it's important to review your finances because, as I said before, buying a home isn't just about buying. You got to think what happens after you purchase that home. And so you want to budget for, as you're buying the home, for the things that you have to cover, those costs, the closing costs, but also emergency funds. What is my budget even after I close on these homes? Knowing that is going to have you better prepared. So when it comes to your pre-approval, now just a rule of thumb, you can do about 3 to 5 times of your annual income if you're thinking, hey, how much can I really afford? If you're just trying to do numbers yourself. But whenever you talk to a mortgage broker like I or to a lender, they will give you what is called a pre-approval. There's a difference between pre-approval and pre-qualification. We kind of talk about that in the Home Buying Hub a little more. But when you have a pre-approval, it's basically saying that you've turned in all the documentation that supports why you qualify for that home price, right? So let's say you went in and you asked to be qualified for 350,000. And based on your income, your debt, based on your credit score, you were able to get pre-approved for 350,000. Well, that sheet of paper is going to be your what is called your buying power. And sometimes that sheet, that pre-approval can help you win a deal versus someone that doesn't have it. So always see what you can get pre-approved for before you go out and start shopping and looking for houses. So once you have your pre-approval, it is time for you to go tour these homes. But before you do that, you want to research homes before you go. You want to start looking at the location, the schools, the daily living, the infrastructure. Before my husband and I purchased our second home, we were looking at, okay, what is the school district? How close is it to the school? Is this going to work for our lifestyle? How close is it to where my husband works? Is the location a location that seems like it's already matured? Is it declining? Or can we see it continue to go up in value? And that's what happened. We chose a location that continues to go up in value. They continue to build new schools. And the daily living and lifestyle around here um, is is exactly what we wanted, right? It's like a little bit of city, but it's still kind of still close knit family wise. So it's kind of like the suburbs, right? And then the infrastructure is things getting built, are businesses coming, especially if you're an investor. This matters because you don't want to buy in areas that nobody is coming to, right? But as a homeowner, you got to think, are you buying the best house on the worst block or are you buying the worst house on the best block? And so for you, you want to think about, hey, how long am I going to stay in this home? How long am I what about this area that I love? And is this going to benefit me 2, 3, 4, 5, 10 years from now? Right? What is that? What does that look like? And that way, when you tour in these houses, you're not stuck on the emotional side of it, but now you're able to make a conscious decision based on the fact that you know what it is that you're looking for and what needs to be happening in that area. All right. So once you found the home, it is time for you to make an offer. That's right. So now, if you have a representative, which is usually a real estate agent, and some commercial individuals don't have necessarily a real estate agent, I still say work with a real estate agent just for the simple fact that they can be able to draw the contracts up with you. They can be able to speak with the seller's representative if they have one and be able to talk to you more about that area and allow for you to make a decision whether or not this is a good offer to put in. So once you put in your offer, now it's time for you to decide, as well as the seller to decide to move forward. Once that happens, this is where it really starts getting on the other side, where the lender, the mortgage broker that you're working with, is able to start getting you that official loan approval. Because without that contract, they are a lender cannot say that we can close on that loan, especially when it's a sale. You have to have a contract. The contract gives the terms of the deal. That's why you have to have it. And in order to get your loan approved, you want to make sure you have those necessary documents, um, so that you can be able to continue on with that process, right? And so the three biggest things, and we talk about it more in the Home Buying Hub, but the three biggest things that are going to impact whatever program you have and whatever approval you need is going to be the income, whether that's from you or a renter, the debt that you carry, and this can also be commercial wise if you have a lien. Excuse me, that's my baby in the back. Debt, okay, as a consumer, credit cards, car loans, student loans, all of that, even if it's in deferment, yes, all of that is taken into consideration. And then your credit. Your credit is going to determine even if you qualify for that program. So those are the main three things that a lender um, in a hub looks at to see the program that you chose, that the brokerage broker chose for you or the loan officer chose for you, is the correct program and if they can get you approved. And that's kind of where I come in. That's where me as a mortgage broker, I come in and I advocate for you to the lenders, right? Oftentimes you'll find loan officers, you will see that it feels kind of salesy, right? Anytime you're dealing with a loan officer or a mortgage broker that's like that, they're about the numbers. And the reason why I say that is because as a mortgage broker, and I'm speaking for me, can't speak for anybody else, you're supposed to advocate for the client. So if you're advocating for the client, you're looking at, I personally look at, what situation are you in right now? Where are you living? Remember, we talked about daily living. What does that lifestyle look like? And what are you looking to do with this house? And how can we be able to not only have the numbers on paper, but have the story translated to the underwriters? Because it can make a big difference when an underwriter knows what's going on with the client, because they are human too. And you have the ability, we have the ability to talk to the underwriters personally to be able to clarify situations for you to help you continue to push that loan approval forward. All right. So some of the important things and accurate, up to date, always the last 30 days is what's going to be asked for. Sometimes income statements, sometimes tax returns if you are self-employed, or if you're self-employed, or if you're doing it under a business transaction, sometimes they'll ask for tax returns, not all the time. Bank statements and credit history. So this is just some of the things. We cover a whole lot more of this in the Home Buying Hub. As I said, you're invited if you want to be able to kind of check it out for a little bit. Okay. All right. Inspection. So this is done as you're working with your lender, getting your documents in, your schedule. You want to make sure that you have your inspection schedule. This will be a buyer's expense. Okay. I know sometimes buyers um they are surprised because they're like, okay, I didn't know I have to pay for this out of pocket, this out of pocket. Yes, if you're putting money down, we talked about it a little early, the good faith money or earnest money, that's money out your pocket, but it counts as a credit when you close. Inspection. This is something that you pay out of your pocket, but it's worth it because it's going to let you know if there is anything under the surface of the house that needs to be fixed. An inspector is going to tell you that. And I highly it's required when you're doing when you're buying a residential property, but it's not required if you're buying under commercial. But I will still, even though it's optional under commercial, I will still say get you a GC or someone out there that can inspect the property, because especially if you're buying it for commercial and for profit purposes, you definitely want to know what that number is that you're going to have to end up paying. And so also during that research phase where you're doing your inspection, we also have the due diligence period. This is a time where you're able to look more into the property and find out, okay, is this worth getting, right? Is this worth the money that that they're asking for? And so this is also going to be a buyer's expense. If there's anything that you want to purchase, any documents that you want to review in terms of the property, all of that you want to do during your due diligence so that you can be able to walk away and be able to still have access to your earnest money. My friend, I'm going to tell you right now, if you're working with a real estate agent, if you're working with a mortgage broker, it doesn't matter. This is your chance to say, okay, I need this done, this done, this done. Don't worry, I got you, okay, of what you should be doing during the due diligence periods. So we'll talk about that a little later. Stick with me. We're going to go to number 8. The appraisal. So the appraisal is what the lender orders on their end. This is also can be done during that due diligence period. So you get to decide how long does that due diligence period do I need? Sometimes when they're purchasing a house, it could be anywhere from 15 days, a couple of days, to weeks or months, if you are buying a bigger property or a commercial property. This due diligence, as I said, that part of that offer, when you are negotiating, you add that due diligence in then. As a lender usually will order an appraisal. You, as a buyer, can order your own appraisal, but that doesn't necessarily mean that the lender will honor it. The lender will order the appraisal, and even me as a mortgage broker, I don't choose the appraiser. They go by market. The appraiser chooses their prices, everything. We have no control over the appraisers. Okay. I wish we did, because I'm gonna tell you, sometimes appraisals can range anywhere from $400, and I've had bigger homes that have gone over $1,000, right? So it all depends on the market, the appraiser, and the property. Okay. And that's going to be also an buyer expense. So there's going to be two type of appraisals. If you are buying for residential, the type of appraisal they're going to do is just a regular appraisal that allows for you to know the home value versus the homes that have sold recently in the area. As an investor, you will get an appraisal. You want to know what are the area rental rates and values in that area, because that's going to let you know whether or not what you're potentially looking to rent the home out for, is it at market value, above or below. All right. So but the appraisal allows for you, my friend, to know if there is any equity in the home. Are you purchasing? And equity is basically the value of the home minus the balance of the loan equals equity. So if the house is worth 400,000, you got approved for 350,000. They offered you the house for 300,000. So 400,000 minus 300,000, you have $100,000 in equity in that home. Okay. And sometimes you can use that equity. And we talk a little bit more about that in the Home Buying Hub. All right. About what you can be able to do with that equity. Okay. All right. So now you have everything in order from your appraisal, your inspection, you've done your due diligence period, you're good with the house, you still want to go. Now it's time to close on that house. Turn in all your documents to to your mortgage broker or lender. Now it is time to close. Now, before you close, I know this is like I've been waiting for this day, whether it's been 30, 60, 45, however long it's been. You've been waiting on this day to happen. And today is the day. This is the day you sign your final paperwork. Yay! But before you sign the paperwork, make sure you review everything. Okay. And this happens with your lender or mortgage broker. Review all the documents, review all the paperwork. You can review it together with them. I personally already review those documents before we even move forward. I make sure everything is ready on the up front. So as we're going through the process, everything that on the back end was right to begin with, right? So you also want to just check through that paperwork. It's going to be a lot of papers you're going to have to sign, okay? That's because it's going, once again, over, and these are your final disclosures, okay? These are your final disclosures. So there's going to go over your loan terms, how much you're going to have to pay back, your interest rate, your APR, your what you contributed, what the seller contributed. It's going to include everything, okay? Everything that says this is the house the person is buying, this is how much it costs, this is how much, um, this is what their credit score was, this is who represented them, this is what it's going to take, this is everything that we charge, this is the final cost that's going to cost for you to pay, right? So if you're paying something at the end of the day, you will either write a check the day of, or you can wire that money to the title company, okay? To the the escrow attorney that's working on your loan. You can be able to send them the closing, right? So that you can just show up and sign your papers. But you want to bring your ID, bring any documents that they tell you to bring the day of. And then if you have any questions, you can always ask the notary or the attorney, the real estate attorney, um, if you have any questions that day. Also, but just because you sign the paper doesn't mean that everything is done. So remember at the beginning, I told you, you want to think about what it's going to cost before, during, and after you purchase the home. Well, this is what you call your exit strategy. So if you're on the commercial side, you kind of know they ask you, what is your exit strategy? What are you looking to do? And we use exit strategy also in business. But here's the thing, that even though the exit strategy is the last step that you take after you close your home, you need to think about it as one of the first things. Because if you are looking to sell or rent out your home, and that's the type of loan that you got, then you know, okay, I might have to do some renovations. Did you get a loan that includes the renovation budget? If you did it, now you're coming out of pocket. Um, are you looking to make this your forever home? You may still want to decorate it nice and, hey, I'm going to take my time. So, or you may say, hey, I'm reselling this in 60 days, 60, 90 days. I don't care what it looks like. I just need to hold it for a little bit, right? So, knowing your exit strategy to begin with is going to allow for you to know how much finances you need at the beginning and during that process. Okay. So don't ever think that just because you purchase your home, it's over. I could chill, I could sit back. The journey has just begun, because home ownership is a beautiful thing. Now you're able to leverage your home. You can build wealth with your home. You can be able, if you ever get in trouble or anything, you can sell your home. um, and I don't want you to think just because you purchase a house, I am stuck in this house for 30 years. You are not. The great thing about real estate is the flexibility of the things that you can be able to do with your home. And I hope that I have the opportunity to share more of those opportunities that you can do with your home a little later. So I don't want this training to be too long, but I want to make sure you get all the goods that you need. Okay. All right, so right here you have some, this is just the real estate programs, an overview. This is not all the real estate programs. These are just the main ones that you will see. And so I made sure I had residential and commercial. So at the top, it lets you know the type of properties that you can finance under residential, commercial, and non-QM. Residential is for someone that is looking to live in the home and they're not looking to collect a profit or anything from that home, right? You want to live there. That's hence residential. Commercial, you're doing it for profit. So your sole main goal is I want to make a profit. That's it, right? So you want to go commercial. Non-QM is for those individuals that don't fit the residential picture, but they still want to be able to purchase a home. So you may be in a bankruptcy, short sale, foreclosures. And there's one property that you could be one type of program that we do talk about, that if you want to use your personal name to purchase you want to use your personal name to purchase a house to rent, then there is a way that you could be able to do that if you do not have your business started yet for your real estate investing. All right, so loan types. You're either going to purchase, refinance, or build. And that's what you see here. Those are your three options. You're either going to purchase a house, refinance, which means you already own it, and now you're either taking cash out or going for a lower interest rate, or construction, where you're going to build from the ground up, which means there's nothing there, and then there will be a house constructed on that land to either live, rent, or sell. All right. Now, on the commercial side, there are three main programs on that side. That is fix and flip, which means you're buying the house for a short period of time, going to fix it up and then sell it. Buying hold, which means I'm going to buy this property and I'm going to hold on to it long term. And then you also have, as I said, construction renovations, where you basically just either building a house or renovating the house to be sold or rented out or refinanced to pull cash out. All right, so the home buying checklist. Now, remember what I said, there's going to be a due diligence period where you want to be able to shore up your numbers. You want to be able to get a good look at the area, more information about the property. Well, this right here, as you can see under the due diligence part period, it's telling you, have the title search. Title searches, if you are doing commercial, there's a way that we'll tell you how to do title searches. If you're doing a commercial loan, usually when you're working with a mortgage brokerage, we'll order the title for you, so you don't have to worry about that. But this home buying checklist is so that you can be able to see small details of each parts of the process. So these are some of the things that you want to do during these points of time in order to make sure that you are on a continuous journey to purchasing your home sooner. Now, this right here, this part of the home buying checklist is kind of like part of the due diligence, right? It goes a little bit more into it. So condition of the home, print this out so you can be able to write on it. The digital version does allow for you to click the apply now if you feel like you're ready to start that pre-approval process, right? But first, understand that during this home buying process, you want, as I said before, location. What is your budget? What are conditions of the property? What is the conditions of the market? What is conditions of the home, the layout? Just everything that needs to be taken into consideration to say whether or not this home is worth getting or not. So this is not an exhaustive list of everything during the due diligence, but it gives you a good idea of the different aspects to look at while you're doing your due diligence. Also, I included in here, this is our home buying process. Just the pro tips, right? So understanding the seller's motivation. If you understand like why they're looking to sell, sometimes you can be able to acquire that property for less because of you being able to build rapport with that seller and get them lower on that price. Sometimes, especially if you're commercial, some of your deals probably will be off market. So you'll kind of see how seller motivation is going to be very important for you to know. Contingencies, as I said before, these contingencies, financing, inspection, this allows for you to walk away. This allows for you to lower the loan amount. Lower the purchase price, just different things. So use the contingencies wise, because if you put too much contingencies in there, the seller may say, whoa, you're asking for too much, and walk away from the deal. So be careful on how you do that. Be flexible with loan terms. Now, as a mortgage broker, I'm telling you, as a home buyer, if you come to me for one program, I'm going to give you multiple. Why? Because different programs have different benefits. And depending on your goals, you want to be able to know what these programs can do for you, because the program that you came in may not be the best program for you, depending on your credit, your income, and your debt. So be flexible and don't feel like one program, you can only qualify for one program. Okay. Sometimes you qualify for none. Sometimes you qualify for them all. We won't know that, but be flexible and still apply so that you can know what program best fits your needs now, as well as your real estate goals. All right. Don't use your cars or get new ones. This is a big thing. Do not use your credit, overuse your credit, which means if you have a 20,000 credit limit card and you go max it out 20,000 because you got to pay for your down payment. Please do not do that. Okay. You cannot use debt to pay debt, for one. All right. So you have to have the money in your reserves, whether that is a 401k that you are using the money from there, friends, family, employer. There's certain, they allow for, the great thing about real estate is you can use other people's money. Now there might be, like, hey, you got to let it sit for a little bit or whatever. It doesn't matter. You can be able to use other people's money. And we talk about that more in our tax-free real estate investing method of using other people's money and using tax-free money to acquire properties. But main rule of thumb, whether you're commercial or residential, don't use your cars. Don't go buy a new car. Don't go opening new cars. Don't go maxing out what you got. Okay. Because that can affect your credit score. A lot of people don't know this. And I'm going to give you this one tip. This is a pro tip. As a lender, as a mortgage broker, when we apply for the program that you want with the lender, we pull your score, right? So that's the score that we kind of go over, things like that. But right when you're about to close, the lender requests for one more credit pool, what's what we call a supplemental credit pool, right? So it doesn't pull everything, but what the lender wants to see, did you open anything new? Because that could change your debt to income ratio. Did you max out your cars? Because that can make your score go down. Did you add anything new? Because that could affect everything. So the lender is going to make one last look at that score before you close. So during that process, don't do nothing. Nothing. Okay. All right. So, and know what you can afford. As we talked about that before, the lender's going to have what you can afford, and then what can you truly afford in your household is going to be very important. And so I hope this mini training has really just brought some clarity on the home buying process. And so I do want to invite you to our home buying hub, which has more of the resources, and it is designed for first timers that want to buy a home or want to invest. It allows for you to be able to have the necessary tools and resources you need so you could buy your first home sooner. So yes, whether you're an investor or a home buyer, you could be able to use the home buying hub to be able to really be able to close on your loans very quickly, get what you need in terms of what does this mean in the loan process. So just like how we went through this guide, there's actually a home buying training in here that takes this guide even deeper, as well as our monthly course releases that we do and our quarterly live events that we do. But our whole goal here is to help you buy your first home sooner, even your next home sooner. So if there is ever anything I can do, please reach out to me. Across the board, I'm in my social medias, Tashana Nicole. But more importantly, you can find me in the Home Buying Hub, where I am helping first timers be able to purchase their home sooner. So I'm gifting you this invite. Just click on the digital version. You can click that button and it'll take you to the invite for you to be able to check out the Home Buying Hub. All right, beautiful boss. I hope that this training has allowed for you to really understand the home buying process a little bit more. Please don't hesitate to reach out, and I'll see you in the Home Buying Hub. Bye.